What's up, Peasy Gang? We back with another video. Today we're going to be discussing NASDAQ 100 trade that I took on July 13th, which was this past Wednesday. Let's get right into it. We're going to start from the top. Here we are on Tuesday. We trading up, creating our high of the week, which we anticipate. When bearish, when you are anticipating lower prices, in the weekly perspective, you are wanting to see if Tuesday during London session or New York is going to give you that significant high. All right. So we get that here. We break down, retest, order block, and then we shift to the downside. All right. Going into Wednesday, the end of Tuesday, here's our new daily candle. Here's our new opening. So we open up, we accumulate orders, buy side, sell side liquidity. We trip up our sellers, so accumulation, manipulation, trading up straight into our rejection block here. And then we break down. This is one 15-minute candle. So with in a period of 15 minutes, we literally dropped like crazy. All right, so we have a displacement in the market here. So when something like this happens, we expect for the market to immediately reprice and rebalance, okay? It's a huge displacement. So we start working our way back up. These are 15-minute candles. Start working our way back up. So once price traded up into this area here, I went short. Okay. Realizing that I probably went short a little too early, so I closed the majority of these two positions right here. Look at the displacement here. Here's our buy side imbalance, sell side inefficiency. We trade down into that and go higher. Now, the motto that I go by is never place a trade until liquidity has been purged. Okay. So I realized that no liquidity has been purged yet. I mean, it did here, but we expanded afterwards here. So that's basically what I wanted to see happen. So closing my shorts within this buy side fair value gap was a smart idea. I still have my stop loss placed up here somewhere. Not up here, but up here. All right. We have buy side liquidity resting above this high. So as soon as this 15-minute candle traded up and took out this high, I went short. Okay. We break down, retest, taking out another little area, this swing high, took that out, trading up into about the 50% of this order block before we broke down. This is a new daily candle. So at this point, I'm looking forward to a Judas swing. After midnight, we trade up. Basically, a retest from this price swing, from this dealing range. Boom, boom. Then we break down lower. So I take partials right here, and then end up taking partials after this final little expansion here. Right there. I was targeting this low, but I realized that I wasn't going to get it when I wanted it. So I went ahead and closed the trade right here. All right. Accumulation here, manipulation, distribution. Now, for the more aggressive traders, this would have been your entry up in here. Accumulation during the manipulation phase. And if you can handle a little drawdown, then this would have been your entry. For the more conservative traders like myself, man, I'm aggressive and conservative, but anyway, for the more conservative traders, and actually I believe it's a lot more beneficial for you to be patient and wait on the redistribution phase, okay? Wait on the redistribution phase, the second price leg, okay? So this will be the first, and this will be the second, okay? It's more conservative, it's more safe, it's more smart, okay? So we have our accumulation, manipulation to the upside, taking out buy side liquidity, trading up into the opening price of the high of Tuesday to the pip. We break down, we chop back up, and just to reprice and rebalance. That's all this is. And then we break down, retest, break down again, retest, break down again. And this is going into Thursday, Friday, smart money reversal, and we'll get into that later on. All right. So here we are. I got everything annotated already. And this is going to be interesting, okay? We have a lot going on right here. We have a lot going on. Now, I do want to apologize in advance if my time-based indicators throw anyone off, okay? It's just how I like to trade. Let me bounce back over here real quick and switch to my arrow. All right. So for those of you who don't know, this is the beginning of Asian session, okay, which is the end of New York session, 5 p.m. Eastern Standard Time, all right? So from 5 p.m. to about 2 a.m. is Asian session. Technically, that's not how I view Asian session. I view Asian session from this area right here. From 5 p.m. to midnight, okay? That is my Asian session right there, okay? This is my Asian session. After midnight, this is a very important time in the marketplace, okay? I just want to throw that out there for anybody who is a beginner. And actually, after I get done with this video, I'm going to try to come up with a good approach to creating a video for beginner traders, all right? I mean, it's not difficult for me to teach somebody one-on-one who is a beginner, but for me to just throw a video on YouTube for beginners, I mean, I'm a advanced intermediate trader, you know, like I really know the ins and outs of the marketplace, but I'm trying to get better at putting it into words. That way other people can really understand it, okay? So y'all just bear with me here, man. I'm not no professional speaker. I am a professional trader, okay? I'm just trying to get better with my words, y'all. We're going to try to start from Sunday. I don't like that we didn't trade up first, creating a significant high on Tuesday. I don't like that, but I mean, this thing was bound and determined to just melt this past week. Okay, so basically, this past the week before last, that was our retest week. Higher prices just to go down. All right. So starting on Sunday, we broke down, traded back up into this SIBI. What is a SIBI? This is sell side imbalance, buy side inefficiency. All right. And this is what the market does. Okay. It jams down. It loses value way too fast. And the market is all about balance. So if the market jams up, then it's gonna work its way back down, okay, in order to rebalance this displacement. So basically what we have here is the market jamming down, creating a displacement in the market, and then popping back up into this imbalance. Okay, well, why didn't it just trade all the way up and completely close in this imbalance? Well, sometimes it does, sometimes it don't. It doesn't necessarily need to, okay? It doesn't necessarily need to. So once we pop back up into there, we break down. Here we are at midnight, and we have our Judas swing. During bearish conditions, we want to anticipate London session to give us our high of the day. All right. And New York session to give us our low of the day. So this is a clear indication that we are breaking down. We're selling. That's what we're doing here. What makes this a bearish breaker? The fact that we trade down, creating a low, jam up, creating a high, and then a lower low. This is a breaker, a bearish breaker. Okay? So bearish breaker, where you create a low, a high, a lower low. Now, after you create this lower low, you want to anticipate price to trade back up into the breaker. Right. Now, the areas to pay attention to is the low of the breaker and 50% of the breaker. These are the areas to pay attention to. As you can see, we get a reaction from it there. And we also have another SIBI. Look at the displacement. Look at the huge imbalance right here. All right. Now, these are two very important confirmations in order to enter a sell at this point. We have the consequent encroachment of our fair value gap, which is 50% of the imbalance. We have that here. On top of that, we have the bearish breaker right here. This is the down move right before the purge of liquidity. All right. Price breaks down during the end of New York, creating relative equal lows right here. We develop a fair value gap, which is the same thing as a SIBI. We pop back up into that. All right. And then purge liquidity. Here's our sell side liquidity, and look at the change in the state of delivery of this candle. This is how you know this is a purge of liquidity. And soon afterwards, we're going to have a retest. Moving on. Following the next day, we have our accumulation down here during Asian session. We have our Judas swing, which is our manipulation, trading straight up into the fair value gap, taking our buy side liquidity here. Let me clean this up. And another thing I want you to pay attention to is, remember when we created this fair value gap and we traded up into about the consequent encroachment of this fair value gap. When this happened, it left this much of our imbalance, right? Watch this. Here's another consequent encroachment play right here. So what you do is, once price trades up, you measure the remainder of that imbalance, and it should react to the 50% of the remainder. Barely missed, probably 1 point off. Yeah, but anyway, in New York Open, we trade up, we break down. Here's our current dealing range. Here's our current dealing range. New York Open kill zone. As you can see, we pop right back up into the 62% retracement. And then we break down. And the reason I have this highlighted in red, because this is a bearish breaker. Okay? This is a bearish breaker because this is the last down move before the run on liquidity, which is resting above this high. Why is buy side liquidity resting above this high, Ryan? Because look at this expansion down. Okay? We have sell side liquidity resting below London sessions low right there. Sell side liquidity resting below London sessions low. As soon as we run out London sessions low, we immediately start to accumulate. All right. And what happens at the accumulation phase? The same thing that we've been seeing happen time and time again, right? Accumulation, manipulation, distribution, redistribution. Accumulation, manipulation, distribution, redistribution. All right. So we have this down move that occurred right before the purge of liquidity. All right. That's why this is called a bearish breaker, is because price traded down and broke structure right after this move right there. So we could say shift in market structure. That's what SMF stands for, shift in market structure. All right. Now, I told you guys earlier, pause the video, and I want you to tell me without rewinding, what part of the bearish breaker is going to be the most sensitive to price? Pause the video. I'm about to continue. Does that sound familiar to anybody? All right. 50% area of the bearish breaker and the low of the bearish breaker. These are the two areas that you need to pay attention to. This red line is annotating 50% of the bearish breaker, okay? Now I'm going to go ahead and delete everything that happened from here over, okay? Because it's no longer important, and I don't want you guys to get sidetracked. We have our rejection block right there, our shift in market structure here, buy side liquidity. So not only is price reaching for the buy side liquidity, it's also reaching for this rejection block, which is the opening price of the highest high of this day. Okay. All right, so we break down, we displace. This is our displacement. We start retesting. That's what this is a retest. As soon as we reach this area, I sell short, okay? As I'm monitoring the trade, I realized that we have a huge displacement right here. There's a huge change in the state of delivery and price at this point. You see here, you see here, and then that. There's a difference in this candle opposed to these two and them two, right? So as I'm selling here and I'm going in profit, I close about 80% of this trade that I took here, about 80%. Okay. It's like a 2-to-1 risk to reward ratio. And after this is done with a 12-point drawdown, okay? Now telling myself, okay, I have my 15-minute order block right here, which is also the 75% fib level or 70.5% fib level. Now telling myself I want to catch this afternoon. I want to catch this afternoon trend, which always happens between 1 to 4 during this time. Now, as soon as price trades up, taking out buy side liquidity resting above this high, I enter my trade right there. Literally with 8.2 points drawdown. We break down, we pop back up, and then we expand lower. I close partials right here. Why? Why did you decide to close partials right there? Because we're going into Asian session, and I was anticipating a retest, okay? I very well could have entered another trade right here, but by this time, profits from this and profits from that, I was really satisfied. So anything more than that is a blessing. All right, so we have a new dealing range. This swing high to this swing low. All right, 50% of our dealing range, the equilibrium, price trades up right into that level. A little fair value gap right here on the 15-minute chart. Boom, we expand lower. I should have took profit. I should have closed some partials here, but I went ahead and waited. We have a order block right there. We have an order block right here. Price trades up into that, tapping it several times before jamming down. And once I seen the reaction off of this rejection block, which is the last down close candle, the lowest low right here. This is the low of this day, okay? So you take the close, extend that out in the time, boom. So once I seen price reject right here, I immediately closed my trade. I closed all profits right here because I knew we were not going to run out previous day's low as soon as that happened. This is our smart money reversal. All right, so I'm going to go ahead and delete all this. That was 275 points in profit, by the way. Now, this is our smart money reversal, which we anticipate to occur on Thursday. All right. Now, this is Thursday and Friday's trading right here. So we anticipate our low of the week to form Thursday between 8 a.m. and 12 noon. Okay. As you can see, it occurred right here. We traded up and we shifted in market structure. All right. And this is also a breaker. What makes this a breaker? We have a low, a high, a lower low. All right, we trade up and we shift in market structure right here, taking out this high. As soon as we took out this high, we shifted the market structure from bearish to bullish short term. Okay. So you take the up move before the purge of liquidity. You take this up move right here and split it in half. And you want to be a buyer within this up move. All right. All right. So let's take this and let's measure this up move right here. Okay. And extend that out in the time. So this will be your bullish breaker right here. And you could have been a buyer at the 50% of the bullish breaker and place your stop loss right below the low of the breaker. Okay. And what are we targeting? We have buy side liquidity resting above previous day's high. All right. We have buy side liquidity resting above this high. So you could have been a buyer right there and you could have literally rode this guy all the way up until whenever you felt satisfied. I mean, that was a beautiful buy. I wish I would have partaked in it. I did not. I did not participate in a buy right here. But this is what our smart money reversal looks like, the end of the week TGIF trade. All right. So the market trades up, trades back down to our bullish breaker, it expands. We create a fair value gap here. We bounce into that 3 times. The first 2 times we bounced into it, we created relative equal lows. And as soon as we jam down, taking out sell side liquidity here, that would have been a beautiful buy for anyone. 240 points to the upside. We jam up in a hurry, creating a displacement in the marketplace. If you did not catch that initial buy, you could have caught this one right here, and the trade would have looked something like this. What do we have here? A fair value gap, consequent encroachment of the fair value gap. You could have entered your trade right there. Or you could have entered it right there. It don't matter. You got to have confidence in this strategy. You gotta have confidence in these concepts because it works. You think it's a coincidence that price keeps reacting from these imbalances? No, not at all. That would have been a beautiful trade for anyone. All right, y'all, I'm gonna go ahead and wrap this video up. I hope you guys have a blessed weekend. Hopefully you guys are using this time away from the markets, back testing, you know, sharpen up your skills and prepare for the trading week ahead. All right, until next time.